This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches spike as Monday opens March with modest declines. The S&P 500 pulls back 0.6 to 6,998, briefly dipping below the 7,000 milestone. The Nasdaq falls 0.8, and the Dow slips 0.4. Tech stocks lead the decline with Nvidia down 2.1 after last week's 9 surge. This isn't panic, it's textbook profit-taking after a historic rally. Traders are locking in gains and repositioning for the month ahead. Last week delivered one of the strongest rallies of 2026. Nvidia reported 78 revenue growth Wednesday, crushing skeptics and sending the S&P 500 through 7,000 for the first time ever. The stock jumped 9, pulling semiconductors and software stocks sharply higher. That kind of vertical move always invites profit-taking. Monday's ISM Manufacturing Index came in at 49.8, below the 50 expansion threshold and slightly under the 50.2 estimate. Factory activity remains in contraction, showing the real economy isn't matching tech strength. Some investors are taking chips off the table until Friday's jobs report provides more clarity on economic health. This is healthy market behavior. After a 200-point SP rally in 5 days, a modest 40-point pullback is normal consolidation. The key test is whether 7,000 becomes support. If the market finds buyers around 6,980 to 7,000 and bounces, that confirms the breakout was real. If it breaks decisively below 6,950, the rally may have overextended. Nvidia's validation of AI infrastructure spending hasn't changed. Demand is real, orders are strong, and cloud providers are committed to build-outs. What's changing is positioning. Some institutional investors are rebalancing, selling recent winners to maintain portfolio allocations. Others are cautious ahead of Friday's jobs data and next week's inflation reports. If you're in tech-heavy portfolios, Monday delivered modest losses after last week's big gains. That's the volatility trade-off for growth exposure. Your 401k overall is still at or near record highs. One day's pullback doesn't erase that. The critical question for March is whether the economy can support premium valuations. If Friday's jobs report shows 180,000 to 200,000 jobs added with stable unemployment, that's the Goldilocks scenario, growth without overheating, supporting both stocks and eventual rate cuts. Weak jobs raise recession fears. Strong jobs delay rate cuts. Either outcome creates volatility. The 7,000 level is now critical technical support. Watch if buyers step in around current levels or if selling accelerates. ISM services data comes Wednesday. Services are 70% of the economy, so this matters more than manufacturing. Friday's jobs report is the week's defining event. Markets expect around 180,000 jobs added. Big beats or misses will move stocks sharply. Also monitor any Fed commentary about rate cut timing given last week's strong tech earnings, but weak manufacturing. If the S&P 500 holds 6,980 to 7,000 this week and bounces, the bull case stays intact. Breaking below 6,950 would signal deeper consolidation ahead. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.